Hi, my name is Conrad Putzier. I'm a reporter at The Real Deal, and I'm here with Nick Romito, who is the CEO and co-founder of VTS, which is a leading leasing and asset management platform for landlords. Thanks for joining us.
Happy to be here.
So let's start at the very beginning. You grew up in New Jersey, right?
Yep.
And I read that your dad was a professional boxer.
He was, I think, a Marine national champ and then Golden Glove champion. And so that was one of my first sports, was boxing, which I still love.
He taught you how to box?
He did, yeah, at a very young age. It's still something that I do today. It's one of my favorite sports in the world. And he would have probably become, I think, a well-known pro boxer. He sparred with Muhammad Ali, Joe Frazier, everybody. But he cut his thumb off building a bar when he was younger, which ended up being a good thing because he actually built a bartending school business, which did really well. And so the world works in mysterious ways.
Yeah.
That ended his boxing career. Yeah.
There was no chance of you ever becoming a professional boxer?
No, I had too many other interests. I just thought it was a really fun sport. Team sports are great, but I love sports where it's just kind of you and an opponent and there's no one else to blame. It's fun for me.
So tell me how you met your future VTS co-founder, Ryan Masiello.
Yeah, so Ryan and I met when we were 10 years old at a surfing contest. I'm happy to say I won. He may say differently. I have the trophy to prove it. And we became really good friends at a very young age. I feel like as a co-founder, sometimes as you go through your journey together, you go through all these ruts in your relationship. We dealt that when we were 10 and 12 years old. So we had beat each other up 1,000 times. And, all the kind of hard parts about the personal aspect of being co-founders, we'd already really gone through. And so it actually ended up working well for us as co-founders when we got older.
Yeah. All right. So you met each other when you were 10.
Yep.
And then you both separately became real estate brokers, right?
He's a year older than me. So he went first. He joined Cushman right out of school and was kind of walking me through how entrepreneurial it was. And he loved it. And it was super hard. I think the conversion rate of people being successful their first 2 years is like sub 10%. It's a really hard business, which he and I both liked because we're highly competitive people. I was at Murray Hill Properties here in New York City for about 4 years, which I liked because there was a brokerage aspect of the business, but also they had a fund that was doing really well. So I could learn the ownership side and fundraising side. I stayed there for about 4 years, then went in-house with the Wasserman family here in New York, so Nate and Paul, who are good friends of mine. And worked with them for a couple of years, where I really learned the asset management side and also just what it was like to run leasing for a couple, big Class A assets. And so that's really where some of the idea came from was, wow, there's kind of no great way to do this today. And Ryan on the broker side was seeing it too.
At what point did you decide, I don't want to be a broker anymore, I actually want to be a real estate tech entrepreneur?
Yeah, well, the funny thing about brokerage, especially, is that it's kind of the perfect place for entrepreneurs because you essentially have your own business day one, right? When you go to any firm, and I'm sure the level of training probably changes from, CBRE to JLL to Colliers, et cetera, but at the end of the day, you're given a phone, a computer, and someone tells you to go and find business. So it was the perfect training ground for us to figure out how to build a business. And so making that leap to actually starting a company wasn't disruptive for us.
Did you have any regrets at the beginning? Any doubts that this might have been the wrong decision for you?
No, I don't think so. I think it was like one of those things that we knew the problem so well, we were kind of obsessed with it, and there was no chance this wasn't going to work. I mean, I remember meeting some early VCs. And the first VC I ever met, it was actually like highly demotivating because no one had really ventured into the commercial real estate space. Everyone knew it was a big market. There was lots of middlemen, lots of fees that went around, but there was never there was no large companies. CoStar at the time was probably half the size they are today. And the VC I met with, we met for coffee and we told him our idea, and he's like, that's the worst idea I've ever heard.
And the idea at the beginning was you take video tours of office spaces and put them online, basically, right?
So the vision was always the same, but we needed a starting point. So it was kind of like our wedge to get in the door. And after that, we just kind of kept bringing the horse to water. And we said, okay, well now, the next part of that process is, where are you tracking the actual name of the tenant who toured the space, the proposal they sent you, and every time we asked the question, which we knew the answer to, it was an Excel spreadsheet. And we're like, that's crazy. Why don't you store it in the same place that content lived, that video, along with your photos, store it all here. And they said, great idea. And so the process just kind of really nicely kept evolving into being centralized in our platform.
Yeah.
And so the video is really just it was a bit of a means to an end, but it was the most kind of low-tech way to get people really excited about technology.
Yeah, but it also didn't quite take off the way you hoped, right? It didn't become like virtual tours of office space hasn't really become a big thing.
No, and it candidly, I mean, I think we're probably a part of the reason for that. You know, our product got so big so fast that from a vision perspective, the data and the workflow and the software side of our business is really what we always cared about. And so at a certain point, we had to the customers saw the value over here a lot more than that initial video content. I still believe, and we still believe, there's a huge gap in the market to provide really great content for owners.
All right, so over time, VTS sort of developed into this company that helps landlords manage their leases, their revenue online in a platform. You weren't the only people who were doing this. Hightower, another company founded by Brandon Weber and backed by Joshua Kushner's Thrive Capital, did sort of the same thing. You guys were competing pretty fiercely, if I remember this correctly. And then at some point, you decided to do something really unusual. You guys decided to just merge.
Because we had we had a lot of brokers who were on both systems who were like, well, now this kind of sucks because you've actually made it worse. You've just solved one problem and then you've put me on two of these things and I'm trying to understand all my information, but I can't. We had investors or owners who were saying, I'm on VTS, my JV partner's on Hightower, I can't even look at my information as a whole. So the market actually came to us pretty aggressively and said, you guys got to figure this out. Like, we love both companies. You should be one. Both teams have the same vision. You're going to streamline all of our issues by becoming one company. And I think the best thing for both of our collective companies was each other for a long time, right? It created credibility in the market. It made noise about a problem that we both knew was a huge issue for everyone. And you had two really strong teams. You know, it wasn't like one team was abnormally stronger than the other from a technical or sales perspective.
And the advantage, I guess, is also just market power, right? If you convince people that they need a product like BTS and you're the only one who's offering something like it, that's basically a monopoly, right?
We have many competitors. I mean, so definitely there's no monopoly for us. I mean, our biggest competitor still today is Excel. Like, the vast majority of the market is still in Microsoft Excel. Or they're trying to make a CRM system do what we do, which we've just seen over and over does not work. I mean, they're getting so much more horsepower from our collective company because we're not battling over like, well, they're doing a blue button, we should do a green button, right? There's kind of like these feature wars you get into that just erode value and make you focus on the wrong things. And now we can be super strategic with our customers and provide a lot more value than we were separately.
Yeah. Is there ever any friction between ex-Hightower and ex-VTS employees? Like, I mean, is there any conflict over who's in charge? Is there ever anything
no,
like that?
I think, listen, early on, there's no way to avoid, you know, we had two very different cultures, right? Same vision, but different cultures. And so we knew going in that was going to have to be an area where we invested significantly. And it started at the top. So before we did the deal, Brandon and I probably spent anywhere from 2 to 4 months getting to know each other. So we just felt like, well, we might have the same vision. He and I had to get along and really be able to work together for this to even work at all. And so that was pretty clear pretty quickly. That was the case, that we both actually genuinely liked each other, loved just talking about where this could go, and there was a lot of good energy. But to your original question, no, today, I'd say we're past the whole, we used to do it better this way. And again, if we do hear someone say it, it's rare, and it's someone usually, even on that kind of legacy team, is the first one to say, like, "What, we're one team, just stop." So we're past that, and now excited to be a single united team.
At the time, I think it was reported that the merger valued the company at around $300 million. Is that roughly correct?
It was reported that.
It was reported that?
There was no cash
no
exchange, so like, again, the market can call it whatever they want. There's no way to really put a specific number on it.
All right, so a year and a half ago, $300 million. How much is VTS worth now?
Oh, God.
Figure,
hopefully
right?
a lot.
Are you a unicorn yet?
Hopefully a lot. I don't know. We haven't done any deals, right? We're lucky enough now to run a really efficient business where we don't need to raise money, and our goal is to become a profitable business. I'm a firm believer in, like, the fundamentals of a business 100 years ago actually are important today, which is businesses are there to make money. I feel like in our modern startup-y world, people lose that and they think raising money is the successful part. It's not. You're borrowing money. So, or diluting yourselves, right?
So while we're on the subject of raising money, there's been a lot of money, a lot of venture capital flowing into real estate tech lately. SoftBank's Vision Fund, for example, gave $4.4 billion to WeWork, invested in Compass, a bunch of other companies. Should we be worried about all this money that's suddenly flowing into the tech space? Are we seeing overvalued companies now?
I mean, I don't think there's anything to worry about. I think valuations are always going to be something that are questioned, right? Especially when you've got real estate companies, and I would consider WeWork a real estate company.
Not a tech company.
Not a tech company. Getting the multiple of a very high margin software technology company when it's really a low margin real estate company. That's the part that I think the market's a little bit confused about, and rightfully so. And we're a huge WeWork customer, and I'm a big WeWork fan. But the valuation is the big question, right? Which I don't have an answer to, and I don't know that most people do, but
Yeah.
Adam seems to have a great one. He's apparently the best fundraiser that's ever lived.
It is interesting, though, that some of the real estate startups with the highest valuation, WeWork, Compass, aren't really tech companies. They're more like
I would not
real estate
consider them
services
tech
companies. Yeah.
100%. I mean, Compass is a brokerage firm. WeWork is effectively a landlord, right? That offers a really great experience. And so they're getting, but to your point, they're getting the multiple of a very high margin tech company, which is I wish I had their multiple.
Right. So WeWork reportedly is considering an IPO. What about you guys? When is that going to happen?
Is WeWork really considering an IPO?
Reportedly, supposedly.
That means they'd have to disclose all their numbers.
Well, they did that anyway because they raised bonds. So
Super interesting. I think for us, right now we're certainly in growth mode, but as I mentioned, we also want to grow super efficiently. And as you think about like IPO strategies, there's a lot of variables, right? The companies that are public today, like Altus, Argus, or CoStar, maybe shouldn't be public companies if you really kind of break them down a little bit. So I think we're still kind of looking at all of our options over the next couple of years. I mean, we're still growing at a very high growth rate, which is good if you wanted to go the IPO route. But we haven't really made a decision yet on just which direction we're going to go from do we stay private or not.
So what is the next big thing with VTS? Tell me more about some of the other products, some of the other offerings that you guys could get into.
Yeah, I mean, there's a couple different ways you can go. I think for us right now, this is the actual theme of our user conference in June, is there's a huge shift right now happening from this property-centric model to a tenant-centric one. And WeWork and others are certainly driving the agenda. People really don't love 80-page leases for an 800 square foot space that costs them $10,000 in legal fees and 6 months to negotiate. And so we're focused on building products that help owners kind of understand that tenant relationships are critical to their business. Even though we've called real estate a relationship business for a long time, we haven't really acted as though it is.
Really? Would you even consider replacing the actual lease transaction with something that's being done online?
100%. And that is 1,000% where our platform grows over time.
Okay, so 5 years from now, if I'm a tenant, I want to lease an office space, I'm not going to sign an 80-page lease. I'm just going to go on VTS and
I hope not.
Plug in my details, basically.
That would be great.
Interesting.
From your mouth to God's ears, so we'll see how it goes.
What about the data side of things? You guys have access to a lot of very interesting data on the landlord side. I'm sure there's some restrictions, but what are you planning to do with all that information that's at your fingertips?
If you're an owner and you own hotel products or residential products, you have lots of great data to make decisions with. On the hotel side, you've got the Star Report. On the residential side or multifamily side, you've got YieldStar. So there are actual market-wide data sets that help us make decisions. But commercial, there is none. And so, we really believe that we're going to be in a position to start to deliver real value to our customers using what's going to be 8 billion square feet in the next 30 to 60 days of real-time deal management and transactions. So
you basically churn through data on your platform to understand what's happening in the market.
Yeah, it would probably be some kind of opt-in platform, but we're early days.
Do you see VTS competing with CoStar in the future?
So we're trying to solve a very different problem. The data that we have, candidly, no one else has. And so it puts us in a really unique position to add value that people have been trying to derive for a long time. Right now we're not focused on building an MLS of any sort, which CoStar is largely an MLS system. I think it's described as an information data company, and it is. I mean, they're obviously using information, but it's largely survey data, building an MLS, which is the standard in the market. We don't have any plans to solve that problem right now.
There used to be two big real estate data companies, CoStar and Xceligent, which was owned by the Daily Mail Group. In December, Xceligent filed for bankruptcy, so now it's just CoStar. Do you think anyone can challenge their dominance at this point?
They have better information than probably most. But if you're asking me, are they invincible? The answer is no. Nobody is. I mean, we all loved BlackBerry for a long time. We all probably BBM'd our friends every single day. Mm-hmm. I don't know how many people you BBM on a daily basis, but probably not many. And so even the biggest companies, at some point the market changes. But they've done an unbelievable job at protecting their stance in the market. I mean, they use their legal team like an R&D team. I think on their last earnings call, they said we're going to sue like 30,000 people. So I think
what went through your head when you heard that?
Oh, I don't give a shit. It doesn't. We don't really kind of touch them in any way.
Yeah.
I'm sure they look at us, but it's part of their strategy is to look at who's out there. And listen, they built themselves a 12 or 13 billion dollar company. So that's a pretty impressive thing to do. But we don't see ourselves in their space necessarily.
So you're basically saying they're using lawsuits to get a competitive advantage.
It's a strategy, right? I mean, if you can do it, why wouldn't you? It's legal, right? I think they sued Excelgent a ton of times. Before they acquired LoopNet, they sued them like 7 times. You use the arrows in your quiver you can. And one of theirs is slow people down. And it works, right? If you're a young startup and someone's suing you for whatever reason, it's very expensive to kind of defend yourself. And so, again, it's just another strategy.
Yeah, I guess their official position is not they're suing people to slow them down or to harm their competition. They're suing people because their images, the data is being stolen and they sort of have to defend themselves, right? That's always the argument that they make.
Correct. But I think if you look at the percentage of cases they probably, and I don't know all the data, right? So I'm just kind of pontificating at this point, but if you look at a lot of the cases they've won versus lost, I would be curious to see what the ratios are like. But again, it's a strategy, right? Like, hey, if it works, keep doing it.
Yeah.
Just don't sue me.
Are you worried?
I'm never worried.
All right.
Good day, I'm okay. Bad day, I'm okay.
There's a lot of buzz about blockchain technology in real estate. Do you see a lot of potential for blockchain in commercial real estate?
I do. I think where there is pushback is, again, we're a very middlemen heavy business. And that's who gets disrupted the most with blockchain. One, it's the positives are that it shortens transaction cycles, but it also shortens fees, right? And that's where people make a lot of their money. So I think where you would see blockchain realistically start to kind of surface is less on the cryptocurrency side, more on the smart contracts side, which I think actually is a great fit for our industry. And now that we're kind of past this, it feels like at least past this insanity of like Bitcoin and it's kind of leveled off a little bit, I think it's forcing people to really look at where the real near-term wins could be. And smart contracts for me feels like the place that would make the most sense.
And is that something you guys have looked into?
We've got 70 engineers and product people. That's all they think. They love it. And so they're always pitching me in ideas. I think it's still very early for anyone in the space to really expect that the market's going to fully adopt it. But over time, it'll happen. You have a lot of people who don't want it to work. I think Jamie Dimon from JP Morgan has said he's going to fire people in his company if he finds out they're buying Bitcoin, like crazy stuff like that. So there's still a lot of pushback. I don't think it goes away, but the jury is still out for me how kind of standardized it becomes or accepted it becomes, at least in the next, call it 2 to 5 years.
You have, as you mentioned, access to some pretty good data. You know what's happening in the real estate space. What are you seeing out there that no one else has really noticed? What are you seeing in your data about the market that hasn't really been published?
The demand is arguably the most important, I think, data set in the market, right? Supply, you can kind of, it's obviously valuable and we have all the supply data, but demand, which is what kinds of tenants are in the market, where are they going, where are they coming from, what are they willing to pay? There are all these kind of metadata points that no one's really tracked because they haven't had this stuff in a single system. And that's going to change the way people buy buildings, sell buildings, lease buildings. I mean, the amount of information that does not exist in the market would blow your mind. The data in the market today is a fraction of what's existed. And so we believe there's a world where that becomes a lot more transparent for people and adds a lot of value in ways they just have never really had before.
Figuring out what the demand is, right? What you just talked about. At the moment, that's the job of brokers, and they charge a lot of money for that, figuring out what the demand is. So are you basically trying to make brokers less important to the real estate transaction?
No, not at all. I mean, brokers are our power users, right? So they are, we've originally built our platform for brokers. They log into VTS more than anyone. And so our job will always be, how do we make them better at their job, but let's give them information they actually need to make the right decision. If you really listen to a great broker talk about the market, it's like a beautiful thing because they know it so well. But there's always going to be this element missing, which is, it feels like it's their gut, which might not be wrong, but the data exists for them to use to make even better decisions and also eloquently or almost like scientifically speak to their clients about why they want to make that decision. So for us, it's all about giving them more information than they had before, along with their clients, right? The investors and owners, because that's our biggest customer. And so that's the direction that we're going as a business.